Your journey to financial freedom starts here, where every decision you make today can create wealth that works for you long after you sleep. In the next few minutes, you'll discover proven strategies to build assets that generate income forever, turning knowledge, systems, and investments into unstoppable financial streams. By the end of this audiobook, you will learn how to identify scalable skills, convert your expertise into products that pay continuously, automate systems to replace your labor, and create compounding revenue streams that grow exponentially over time. Every insight is actionable, practical, and designed to help you take control of your financial future starting now. Subscribe to Audiobook Tone and join a community committed to turning ideas into assets and ambition into lasting wealth. Every week you'll get content like this, practical, motivational, and transformational guidance that empowers you to achieve financial freedom through disciplined action and smart strategies. Number 1. Identify scalable skills creating assets. Start by slowing your breath and noticing one simple truth. Skill is the bridge between time and value. When time is the only thing you trade, income stops when effort stops. When skill is the lever you build once and use many times, income keeps flowing long after the initial work. The first step toward building assets that pay you forever is to identify the skills that scale, skills that, when applied, can be amplified, automated, or packaged, so they outlive the hours you put in. Begin with an honest inventory. Sit with a blank sheet and list every capability you have from the smallest to the largest. Include technical abilities like coding, design, and data analysis, soft powers like persuasion, storytelling, and negotiation, and life skills like organizing, teaching, or simplifying complex subjects. Do not gawk the list. The act of naming each skill reveals possibilities. Some items will feel raw and underdeveloped. That is beneficial. Skill development begins with recognition. Next, add a column to that list measuring two simple things: demand and leverage. Demand asks one question: will people pay for this? Leverage asks another: can this skill be multiplied without a proportional increase in your time? A skill with low demand and low leverage, for example, an obscure hobby with no buyers, is not priority. A skill with high demand and high leverage, copywriting that can produce ebooks, courses, and sales funnels, becomes a candidate for asset creation. Move from abstract to evidence. For each high potential skill, perform a quick market test. Search marketplaces, course platforms, job boards, and niche communities. See if people are buying related services or products. Read 3 or 4 product descriptions, scan prices, and note common terms. If 3 or 4 mirror your ability and buyers exist, that skill is not merely useful, it is marketable. This is not guesswork, it is simple validation. Choose focus ruthlessly. The human mind feels powerful when it multiplies tasks, but progress comes through depth. Pick 1 or 2 skills from your validated list. Choose the skill that aligns with both what you enjoy and where buyers exist. If the choice is purely emotional, pair it with the one that shows market demand. Let discipline balance desire. Your aim is not mastery in everything. It is mastery in a skill that can be turned into an asset. Apply deliberate practice with a purpose. Once a skill is selected, design a compact version of mastery. Break it into daily drills that take no more than an hour, but are consistent. For instance, if the skill is persuasive writing, write 1 short sales page or email every day for 90 days. If the skill is data visualization, create a useful chart every day and explain it to a non-technical friend. The point is repetition with feedback. Measure improvement, ask for critique, and refine. Improvement is not accidental, it is engineered. Convert skill into repeatable processes. Assets are built from processes. Ask, what steps do I take when I perform this skill? Write them down verbatim. Reduce them into a checklist. A photographer's process might be client briefing, shot list, lighting setup, shoot, edit, deliver. A content creator's process might be research, outline, draft, edit, publish, promote. When the process is visible, it becomes delegable, automatable, or packageable. That is the turning point where time-based work becomes asset-based work. Prototype the smallest viable asset. Think in terms of experiments. An asset does not need to be perfect. It needs to be useful. Create a tiny product that captures the value of your skill. A 30-minute workshop, a one-page template, a short ebook, a library of stock visuals, a simple script, or a micro course. Price it modestly and put it in front of real people. The feedback you receive will be more valuable than the hours spent worrying about perfection. Each sale, each download, each email is a signal that your skill can live beyond you. Standardize and document. Once a prototype gets traction, document every step from creation to delivery. Record templates, scripts, checklists, and email sequences. This documentation allows the asset to be scaled. It also forces clarity. If you cannot describe how the product is made and delivered in a single paragraph, you have work left to do. Well-documented assets are easy to hand off to contractors, automate with software, or repurpose into other formats. Choose distribution channels that move on their own. A great asset without reach is still trapped. Consider platforms and systems that amplify without daily manual labor. An automated email funnel, a membership site, a marketplace listing, or a licensing agreement. For instance, a course hosted on a platform with search visibility and payment processing may sell for years with occasional updates. Licensing your templates to businesses creates recurring payments as each new subscriber uses your work. The goal is frictionless distribution. Once you set the channel, the asset gets discovered and purchased with minimal ongoing effort. Protect and own what matters. When scaling a skill into an asset, be mindful of ownership. If you build something inside a platform that can change rules or remove content, have a parallel owned option, an email list, a personal site, or downloadable files you control. Ownership is not just legal, it is freedom. Your assets should be portable enough that if one channel falters, the asset still brings income through another path. Automate maintenance and updates. Assets require occasional care. Set a simple schedule, monthly check-ins, quarterly updates, annual refreshes. Automate reminders and delegate routine tasks. Use templates for customer responses, scheduling tools for appointments, and scripts for content updates. Automation does not mean abandonment. It means caring with low friction, so the asset remains valuable without monopolizing your time. Reinvest the returns intelligently. Early earnings from assets are not windfalls to be frittered away. Treat them as seed capital for further scaling. Reinvest in better tooling. Purchase targeted ads to expand reach. Hire a contractor to speed content production, or buy a small complementary asset that increases your bundle value. Compounding happens when revenue from one asset accelerates the creation and distribution of more assets. Guard attention as the primary resource. The temptation in building assets is to chase shiny formats. An app, a podcast, a subscription. The real limiter is attention, both yours and your market's. Practice stoic discipline. Schedule deep work hours. Remove distractions, and use structured sprints to create uninterrupted value. Your clarity and focus determine the speed and quality with which a skill becomes an enduring asset. Measure what matters. Track simple, concrete metrics. Number of buyers, average revenue per buyer, churn and time spent on upkeep. Use a spreadsheet. If an asset earns money but takes too much time, it is not truly scalable. The aim is to increase the ratio of revenue to time. If a change increases that ratio, it is worth doing. If it does not, iterate or let it go. Prepare for friction and failure. Expect stalls. Some prototypes will fail. Some platforms will change terms. Some buyers will not show up. Resilience is built by viewing setbacks as data. When a product underperforms, analyze without drama. What did the market react to? Was price the issue, distribution, messaging, or the core value? Use this clarity to pivot. Failure is not a verdict. It is an instruction. Hold the stoic posture through the process. The work of transforming skills into assets requires patience, humility, and steady action. Resist envy when another person seems to succeed overnight. Most overnight successes are years of hidden work. Embrace small daily victories. The slow accumulation of habits, skills, and customers leads to compounding outcomes that look miraculous only from afar. Finish each week with a short review. Ask 4 questions. What moved the asset forward? What blocked progress? What feedback arrived? And what is the single next action that will matter most? That cadence keeps the machine lean and focused. Incremental adjustments compound into large gains. Picture the end state often. Imagine waking to a calm morning where money arrives through systems you built, a monthly royalty, a course sale at 3 in the morning, a licensing check. Feel the lightness in your chest, the quiet satisfaction of work done well, the knowledge that your skills feed your life and other lives. That vision is not indulgence, it is fuel for disciplined action. Practical starter checklist to begin today. Inventory every skill, rank them by demand, and leverage. Pick one to focus on. Design a 90-day deliberate practice plan. Create a smallest viable asset in 30 days. Launch it to a small audience. Document the process. Automate distribution. Schedule reinvestment of the first profits. Each item on that list is a concrete step you can complete this week. Skill is the raw material of freedom. When chosen carefully, practiced deliberately, and engineered into processes and products, it becomes an asset that pays beyond your hours. The path requires patience and stubborn work, but the reward is lasting, the ability to live by design, not by the clock. Your life becomes less about selling time and more about owning systems. Start by naming your skills, then craft them into something that keeps giving. The first asset is the hardest. Every one after it is a little easier, because practice compounds not only money, but wisdom. Embrace the discipline, do the work, and build something that outlasts you. Number 2, convert knowledge into evergreen products. Knowledge is one of the most powerful forms of wealth. Unlike money, which can be spent, or time, which cannot be recovered, knowledge grows when applied, shared, and structured correctly. The key to converting knowledge into an asset that generates income indefinitely is to understand its value beyond yourself. Knowledge is only powerful when it meets a need, solves a problem, or fills a gap for others. It is the bridge between what you know and what the world is willing to pay for. Start by mapping the knowledge you hold. Take a piece of paper or open a digital document and list everything you can teach, explain, or guide someone through. Do not censor yourself or limit this to formal expertise. Everyday experience, insights gained from failure, lessons from hobbies, problem-solving skills, and professional expertise all count. Each of these pieces of knowledge can form the foundation of an evergreen product, if structured properly. Once you have a list, evaluate it against usefulness. Ask yourself, which items solve a recurring problem, answer a frequent question, or simplify a complicated process. Knowledge that addresses a specific need has the highest potential for evergreen products. For example, a framework for learning a new skill quickly, a strategy to save money effectively, or a method to reduce anxiety can all become products with long-term value. The focus is on permanence. The knowledge must retain its relevance over months and years, not just this week. Next, consider the format that best preserves and shares this knowledge. Knowledge becomes an asset when it is packaged so that it can be consumed independently of your presence. This can take many forms: online courses, ebooks, templates, toolkits, checklists, webinars, audio programs, or instructional videos. Each format has strengths depending on the audience and the type of knowledge. A complex skill may benefit from video demonstrations, while a structured methodology could thrive as an ebook or checklist. The goal is to ensure that your expertise is distilled into a consumable format that others can use repeatedly. The process of converting knowledge into an evergreen product starts with clarity. Begin by defining the problem your product will solve. Who is it for? And what outcome will they achieve after consuming it? Clarity at this stage is critical. A vague or broad topic often fails to gain traction. Specificity matters. The clearer the promise, the more valuable the knowledge becomes. When someone picks up your product, they should immediately understand how it will improve their life. Once the problem is defined, outline a step-by-step structure for your product. Break down complex ideas into actionable modules or chapters. Each module should build upon the previous one, guiding the learner from confusion to clarity. Avoid assuming prior knowledge unless your product is explicitly advanced. Every lesson, tip, or instruction should be standalone enough to create immediate impact, yet coherent enough to contribute to the overall transformation. Quality matters, but perfection is a myth. The first version of your product does not need to be flawless. Focus on delivering clarity, actionable steps, and tangible value. The sooner you release something that helps others, the sooner you can gather feedback and improve. Evergreen products thrive not because they are perfect at launch, but because they evolve, adapt, and continue to serve their audience consistently over time. The ability to iterate is what ensures longevity. Once the product is structured, the next step is packaging and presentation. Presentation is more than aesthetics. It is about accessibility and usability. An ebook should be easy to navigate. An online course should have clear progress indicators, and templates should be intuitive to use. Accessibility enhances perceived value and reduces friction for the user. People return to and recommend products that are not only useful but easy and pleasant to interact with. Distribution channels must be chosen strategically. Evergreen products work best when placed on platforms that allow consistent visibility without daily effort. This could be a marketplace, a personal website, a subscription platform, or a learning management system. Automating sales through checkout systems, email sequences, and delivery mechanisms ensures that the product generates income even when you are focused on creating the next asset. Each transaction becomes a tiny step toward compounding wealth. Marketing evergreen products is an exercise in visibility, authority, and trust. People are more likely to invest in knowledge that comes from a recognized source. Demonstrate your expertise through blogs, social media posts, videos, or free mini lessons that showcase your unique approach. When you provide value up front, you create trust and increase the likelihood that your audience will invest in the complete product. This marketing strategy should not feel pushy but natural. The product solves a problem, and the buyer sees the transformation before they even commit. Maintaining relevance is critical. Evergreen does not mean stagnant. Even timeless knowledge can benefit from periodic updates. Review your products quarterly or annually to ensure the examples, terminology, or techniques remain accurate and applicable. Add new insights gained from experience to enhance the product's value. These updates can be minor improvements or entirely new modules, but they keep the product alive and attractive to both new and returning buyers. Protecting your intellectual property ensures longevity. Use copyright, trademarks, or licensing agreements where necessary, and make sure your distribution channels respect ownership. Evergreen knowledge becomes vulnerable if it can be copied or distributed without permission. Ownership allows you to control the value, maintain credibility, and generate recurring revenue through licenses or exclusive rights. This is not about restricting access unnecessarily. It is about safeguarding the product so it can continue generating income indefinitely. Automation is the key to transforming knowledge into an asset that pays forever. Once a product is built, create systems that allow it to operate without your constant attention. Automated email sequences, scheduled webinars, or pre-recorded tutorials can keep generating leads and conversions while you focus on higher-level creation. The combination of automation and high-quality content is what converts knowledge into income that persists beyond the hours you work. Reinvesting proceeds from your products amplifies their impact. The first sales are proof of concept. Use the revenue to improve production quality, expand distribution, or create complementary products. Each reinvestment magnifies the reach of your knowledge and strengthens your portfolio of evergreen assets. The compounding effect is not just financial, it also builds authority and influence, which increases the value of every subsequent product. Mindset plays a silent but powerful role in this process. Treat your knowledge as a tool for transformation, not merely a product to sell. Your commitment to helping others shapes the quality, authenticity, and longevity of the asset. A product born from genuine expertise and concern for the user's success is naturally more sustainable and respected. Evergreen products flourish when built on integrity, clarity, and usefulness. Practical steps to begin immediately include listing your knowledge areas, identifying problems you can solve, choosing a format, structuring a step-by-step framework, creating a first version, selecting distribution channels, automating delivery, marketing through authority-building content, and scheduling periodic reviews. Each of these steps is manageable in isolation, but collectively they form the blueprint for converting knowledge into a lasting asset. The essence of evergreen products lies in their ability to provide ongoing value with minimal ongoing input. They allow you to reach countless people without needing to trade additional hours for each sale. Knowledge, when structured, shared, and protected effectively, becomes a living asset, teaching, guiding, and generating income for years to come. It is one of the few forms of wealth that grows exponentially, benefiting both you and the people who receive it. The process requires patience, care, and discipline. Immediate results may not appear, but with consistent creation, refinement, and automation, the asset begins to sustain itself. Visualize the long-term payoff, a growing library of products that educate, solve problems, and produce income even when you focus on learning, creating, or living your life. That vision motivates persistent action, grounding every decision in the creation of enduring value. Start with small steps, remain focused, and continually refine. Knowledge is the seed. Your effort, structure, and discipline are the water, sunlight, and soil that make it grow. Over time, the evergreen products you create will not just generate income, they will establish credibility, influence, and the freedom to invest your energy where it matters most. The act of transforming knowledge into a product is not merely entrepreneurial, it is an investment in a lifetime of compounding impact. Every lesson, insight, or strategy you package into a product becomes a building block of long-term security and influence. The skill of converting knowledge into evergreen assets is a discipline that requires reflection, experimentation, and commitment, but it yields one of the most powerful forms of freedom available, a system where what you know continues to create value for yourself and for others indefinitely. Number 3. Automate systems replacing your labor. One of the most transformative shifts in building lasting wealth is moving from trading hours for money to creating systems that work independently of your constant effort. Labor, no matter how skilled or dedicated, is finite. The moment you stop working, your income stops. Automation, however, allows you to construct mechanisms that continue to generate results without demanding your constant presence. The first step is seeing your work not as a collection of tasks, but as a network of repeatable processes that can be observed, measured, and improved. Begin by mapping every recurring function in your work or business. List each action you perform regularly, whether it is responding to emails, processing client requests, creating content, posting updates, handling payments, or following up with leads. Nothing is too small. Each action represents an opportunity to transform personal effort into automated execution. Seeing these patterns objectively is critical because most labor is hidden in habits and routines that feel inevitable. Identifying them brings clarity and control. Next, assess which of these tasks are truly essential versus habitual or avoidable. Some work feels necessary but yields little return. Focus on tasks that contribute directly to income, customer satisfaction, or long-term asset growth. Once you separate high-value actions from noise, you can decide which processes are worth automating and which can be delegated, paused, or eliminated. This triage ensures that your automation efforts target real leverage points rather than wasted energy. Once high-value processes are identified, break them down into clear, repeatable steps. A system cannot be automated if it is vague or inconsistent. Document every step, every decision point, every input and out. For example, if managing client onboarding, specify the exact emails, documents, and timelines. If posting content, outline the drafting, editing, scheduling, and distribution workflow. The act of documentation is itself a form of leverage. It turns tacit knowledge into explicit instructions that can later be programmed or handed off. Technology is your most powerful ally in this stage. Identify tools that match the tasks you want to automate. For communication, automated email sequences, chatbots, and scheduling tools can handle initial outreach and follow-ups. For sales, checkout systems and membership platforms can process payments without intervention. Project management software can track progress and trigger actions automatically. The goal is to replace repetitive manual effort with consistent, reliable systems that function without daily oversight. Automation is not about creating cold, impersonal machines. Effective systems maintain quality, clarity, and responsiveness. For example, a client onboarding sequence can include personalized fields in emails, conditional logic to handle different responses, and automated reminders timed to optimize engagement. The objective is to ensure that the system not only reduces your labor, but enhances the experience for the people interacting with it. Efficiency without effectiveness is meaningless. Testing is critical. Any automated system must be monitored during the initial phase to ensure it functions as intended. Even small errors can cascade, damaging relationships, trust, and revenue. Check for timing issues, miscommunications, or skip steps. Adjust rules, triggers, and sequences based on real-world observations. Continuous refinement in the early stages prevents small problems from becoming systemic issues. Delegation complements automation. Systems often function best when combined with selective human oversight. For tasks that require judgment, empathy, or creativity, assign a trusted person or contractor to manage exceptions. Their role is not to replace the system, but to maintain quality and intervene only when the system reaches its limits. This hybrid approach allows maximum labor replacement while preserving flexibility and human touch. Automation scales when it is modular. Each system should be independent, but capable of integration with others. For example, a sales funnel system should feed into email marketing, which in turn triggers content distribution or fulfillment processes. By linking modules, you create a network of autonomous workflows that collectively reduce labor dramatically. Each new system built can leverage existing infrastructure, compounding efficiency over time. Measure impact consistently. Track not only time saved, but also output quality, customer satisfaction, and financial return. Metrics reveal whether automation is achieving the intended effect or introducing hidden friction. Adjust thresholds, triggers, and logic as needed. A system that reduces labor but diminishes revenue or satisfaction is not true automation. It is merely a shift of effort from one place to another. True automation enhances both efficiency and value. Plan for contingencies. Systems, no matter how well designed, will encounter failures. Software glitches, miscommunications, unexpected inputs, or changing market conditions. Build monitoring checkpoints and automate alerts for unusual behavior, schedule regular audits, and create backup processes. Anticipating potential breakdowns allows the system to maintain function and trust, even in the face of unexpected events. Resilience is as critical as automation itself. Automating labor also requires a mindset shift. Success depends not just on tools but on the discipline to let go of control. Many resist automation because of perfectionism or fear of errors. Yet, delay costs more than minor mistakes. Embrace iteration, deploy, observe, refine. Systems can always improve, but they cannot generate value until they are activated. Patience, persistence, and a willingness to trust the process are essential for transformation. Compounding occurs when one automated system triggers another. For instance, an automated lead capture can feed a nurturing sequence, which triggers content delivery, which leads to sales, which then triggers feedback collection. Each system interacts with others to generate outcomes that multiply beyond what any single manual effort could achieve. Understanding this network effect transforms your labor replacement strategy from isolated improvements into exponential growth. Reinvest, save time strategically. As systems take over manual tasks, the hours you regain should be devoted to high-leverage activities, creating new assets, improving existing systems, expanding markets, or developing additional skills. The purpose of labor replacement is not idle time, but the creation of freedom and capacity to generate further value. Each hour reclaimed can now be multiplied through new assets and innovations. Security and control are essential. Automation relies on platforms, tools, and third-party software. Maintain backups, review access controls, and ensure critical data is protected. Systems that fail due to neglect or security breaches not only waste time but jeopardize revenue and trust. Ownership of data, processes, and infrastructure safeguards the independence and sustainability of your automated labor. A disciplined schedule of review ensures continued effectiveness. Weekly or monthly audits of automated workflows help identify bottlenecks, outdated sequences, or opportunities for improvement. Continuous observation, even in a system designed to replace your labor, prevents stagnation and maintains relevance. Systems should evolve as your knowledge, audience, and market conditions evolve. Automation without adaptation eventually loses value. The emotional benefit of replacing labor with systems is profound. Freed from constant repetitive effort, you can focus energy on creativity, strategy, and personal growth. The weight of unending tasks lifts, leaving space for reflection, vision, and long-term planning. Labor replacement is not merely technical efficiency, it is liberation, allowing your mind and time to operate at a higher level. Immediate action begins with simple, tangible steps. Identify a single repetitive task, break it into clear steps, select a tool or method to automate, implement it, and monitor the outcome. Once one system functions reliably, move on to the next. Incremental progress compounds. Each automated task reduces dependence on your direct effort and builds a foundation for a self-sustaining network of processes. The ultimate goal is freedom coupled with productivity. Automated systems do not replace the need for insight, creativity, or judgment. They free you to focus on higher-order work while lower-level processes continue to function. The combination of disciplined structure, intelligent technology, and strategic oversight transforms labor into leverage. Over time, these systems become assets in their own right, producing outcomes without requiring ongoing personal. By systematically replacing labor with intelligent processes, you create a life where effort is multiplied, results are magnified, and value continues to flow. This approach allows wealth creation not through endless toil but through disciplined design. Labor replacement is the bridge between working for money and creating systems that generate sustainable long-term income, freeing you to focus on growth, strategy, and the pursuit of meaningful impact. Number 4. Acquire cash flow businesses with leverage. Wealth grows fastest when you acquire systems that already generate revenue. Building a business from scratch is powerful, but acquiring an existing cash flow business allows you to step into momentum. These businesses have established customers, proven products or services, and operational structures that already function. Instead of starting at zero, you inherit a moving engine, and your focus shifts to optimization, expansion, and strategic leverage. The key lies in identifying opportunities where your capital, insight, or connections can multiply existing earnings. Begin by understanding what a cash flow business really is. It is not merely a company that produces sales. It is a system that consistently converts value into revenue with predictable patterns. Whether it is an online subscription service, a retail store, a niche e-commerce brand, or a service-based company, the crucial factor is reliability. Consistent, recurring income indicates that the underlying model is sound and can sustain your investment. Look for businesses where customers repeatedly return, payments are automated, and operational processes are clearly documented. Leverage magnifies the value of acquisition. Leverage does not mean borrowing recklessly. It means structuring an arrangement where your resources, money, knowledge, or time produce results far beyond their intrinsic cost. This could involve using financing to acquire a business, negotiating seller terms that require minimal upfront cash, or leveraging your expertise to increase profitability without proportional effort. Smart leverage converts moderate capital into substantial influence over cash flow, accelerating wealth creation. Start with research. Explore industries you understand, where you can add immediate value. Familiarity allows faster recognition of inefficiencies, hidden potential, and growth opportunities. Study market trends, analyze competitors, and evaluate the stability of demand. Assess the existing customer base. Is it loyal, engaged, and growing? Examine margins, recurring revenue, and operating expenses. These metrics reveal whether the business is generating genuine cash flow or merely appearing profitable on paper. Due diligence is non-negotiable. Financial statements, Contracts, tax records, and operational logs must be scrutinized carefully. Seek clarity on liabilities, obligations, and any hidden risks. Understanding the full picture prevents surprises that could erode returns. Speak with employees, suppliers, and customers if possible. Real insight comes from seeing how the system operates, day to day, not only what is on paper. Knowledge reduces uncertainty and empowers strategic decisions. Valuation requires disciplined judgment. Avoid overpaying based on emotion or potential alone. Calculate expected returns, factoring in improvements you can realistically implement. Consider how much additional income the business can generate under your guidance versus the cost of acquisition. A slightly smaller business purchased wisely often produces more long-term wealth than a flashy, overpriced opportunity. The discipline to wait for the right price is a hallmark of successful acquisition. Post-acquisition, focus on optimization before expansion. Even healthy cash flow businesses often have inefficiencies that can be improved. Streamline operations, renegotiate supplier agreements, reduce unnecessary overhead, and implement automated systems to replace manual effort. Small improvements compound quickly, increasing net income without major investment. The leverage you apply at this stage is intellectual and strategic. Smart decisions on resource allocation magnify every dollar and hour spent. Leverage also comes from delegation. A business is valuable not for the work you do personally, but for the systems, people, and processes it employs. Hire capable managers, create clear standard operating procedures, and implement accountability frameworks. Once leadership structures are reliable, you can step back from day-to-day tasks, freeing time to oversee multiple ventures or explore new investments. Your labor is replaced by well-designed systems and capable teams. Expansion is where compounding begins. A business already generating cash flow can be scaled with incremental investment. Add complementary products or services, extend into new markets, optimize marketing funnels, or acquire smaller competitors to consolidate value. Every strategic enhancement increases revenue without proportional increases in your personal effort. The combination of acquisition and leverage allows wealth to grow exponentially rather than linearly. Mindset is crucial throughout the process. Acquiring a business requires patience, discernment, and emotional discipline. Avoid chasing deals out of fear of missing out. Focus instead on quality opportunities where your skills, vision, and resources create measurable impact. Confidence is built through preparation, research, and experience. Every acquisition should be approached strategically, with the goal of generating long-term sustainable cash flow rather than short-term gratification. Risk management is an inherent part of acquisition. Diversify across industries or revenue streams when possible. Have contingency plans for economic fluctuations, operational failures, or customer attrition. Protect critical assets through insurance, contracts, and legal safeguards. Leverage amplifies returns but also magnifies mistakes. A disciplined approach to risk ensures that the system continues to produce even when challenges arise. Automation further enhances the value of acquired businesses. Implementing software solutions for inventory management, customer support, accounting, and sales tracking reduces the need for constant personal involvement. Automated workflows standardize operations, minimize errors, and provide real-time insights into performance. By reducing reliance on human labor, the business becomes more resilient, scalable, and less dependent on your daily presence. Strategic partnerships extend reach and influence. Collaborate with complementary businesses, suppliers, or affiliates to increase exposure, drive additional revenue, and share operational costs. These alliances multiply the effectiveness of the acquired business without demanding proportional effort. Every partnership is a form of leverage, allowing you to capture value from networks and expertise that would otherwise take years to develop independently. Monitor key performance indicators diligently. Track metrics such as cash flow, customer acquisition cost, churn, profit margins, and operational efficiency. Regular monitoring allows early detection of issues, enabling timely intervention before small problems escalate. Cash flow is not static. It responds to market forces, management decisions, and consumer behavior. Vigilant oversight ensures that the business continues to generate predictable income. Reinvest wisely to maximize returns. Use profits to enhance infrastructure, increase marketing reach, upgrade technology, or acquire additional complementary businesses. Each reinvestment should be evaluated against potential return on capital and alignment with long-term strategy. Compounding through reinvestment accelerates growth and strengthens the durability of your cash flow portfolio. The emotional impact of acquiring cash flow businesses is profound. Unlike speculative investments, these assets produce tangible results from day one. The psychological relief of having income streams independent of your labor fosters clarity, confidence, and freedom. With time and strategic oversight, these businesses can sustain a lifestyle, fund additional ventures, and create generational wealth. Immediate action begins with education and networking. Learn how business valuations work, understand operational metrics, and connect with brokers, entrepreneurs, and investors. Seek mentorship from those who have successfully acquired and scaled businesses. Knowledge combined with strategic action is the foundation for confident acquisitions. Visualize the long-term potential. Imagine stepping into a business where existing systems, employees, and customers continue to generate income while your strategic decisions guide growth. Picture reinvesting profits to acquire additional businesses, creating a network of interconnected cash flow assets. This vision is not fantasy. It is a roadmap for disciplined, leveraged wealth creation. The discipline of acquiring and optimizing cash flow businesses transforms capital into freedom. Each business is a machine that produces results independent of your personal labor. Your focus is on strategic oversight, process improvement, and expansion. Over time, the network of businesses compounds income, influence, and opportunity, turning effort into enduring wealth. Every acquisition begins with preparation, research, and clarity of purpose. The process requires patience, judgment, and strategic action. With diligence, each step, from identifying opportunities to leveraging systems and scaling growth, builds lasting assets that generate cash flow indefinitely. This approach shifts the paradigm from working for money to commanding systems that deliver results, creating wealth that persists and grows without constant personal effort. Number 5. Turn audience attention into income. Attention is the most valuable currency in the modern world. It is finite, fleeting, and extremely powerful when harnessed correctly. Every person who chooses to listen to your ideas, read your words, or watch your content represents potential energy waiting to be converted into value. Turning attention into income is not about manipulation or gimmicks. It is about creating systems where the audience benefits from your insight, products, or services, and you capture a fraction of that value sustainably. Start by understanding the psychology of attention. People invest time where they perceive meaningful returns, knowledge, entertainment, solutions, or connection. To capture attention, your offering must either solve a problem, inspire action, or deliver enjoyment consistently. The more focused your content is on fulfilling these needs, the longer attention will hold, and the more trust you cultivate. Trust is the bridge between audience engagement and income. Without it, attention is ephemeral. With it, attention becomes loyalty and revenue. Identify your niche deliberately. Broad appeal can feel tempting, but clarity attracts the right audience. A narrowly defined niche allows your message to resonate deeply and positions you as an authority. Consider your strengths, experiences, and insight. Which topics can you communicate with confidence and depth? Which problems can you solve better than others? The sharper your focus, the easier it is to convert attention into meaningful action. Consistency builds recognition. Attention is not captured in a single interaction. It grows through repeated, high-quality engagement. Deliver content, insights, or guidance on a reliable schedule. Each touchpoint strengthens your presence and reminds the audience of your value. Over time, consistency compounds, creating familiarity and trust, which are prerequisites for monetization. Sporadic bursts of activity rarely yield sustainable results. Engagement is the lifeblood of attention. A passive audience may consume content but is unlikely to convert into income. Encourage participation through questions, comments, interactive challenges, or personalized responses. Engagement creates a sense of connection, making the audience more receptive to offerings and more likely to share your work, extending reach organically. Every interaction is an opportunity to strengthen the bond and prepare the way for monetization. Multiple pathways exist to convert attention into income, and diversification reduces risk. Direct monetization can include selling products, courses, or services that solve specific problems for your audience. Indirect methods involve advertising, sponsorships, affiliate partnerships, or subscriptions. Each strategy requires clarity about what your audience values and how your offering aligns with their needs. A diversified approach maximizes income potential while preserving the integrity of the relationship. Begin with micro products or entry-level offerings. These allow the audience to experience value at low cost or risk, building confidence and trust. For instance, a short guide, template, or introductory course can serve as an initial point of conversion. When delivered effectively, these offerings create proof of value and lay the foundation for higher-ticket products, services, or long-term subscriptions. Small wins early in the process validate both your approach and the audience's trust. Attention can also be monetized through scaling systems, platforms, email sequences, automated content delivery, and membership sites allow engagement to continue without constant manual effort. Each system transforms individual interactions into repeated opportunities for conversion. Automation ensures that the audience's interest is captured and acted upon consistently, freeing time for content creation, strategy, or product development. The quality of your communication directly influences conversion. Clear, compelling, and authentic messaging increases the likelihood that attention translates into income. Avoid jargon, overcomplicated explanations, or hollow promises. Responding to the audience's needs with tangible solutions, practical examples, and actionable guidance. When people feel that time spent engaging with you provides real benefit, they are naturally inclined to invest in your offerings. Leverage storytelling to deepen attention. Humans are wired to connect through narratives, experiences, and emotion. Sharing personal stories, lessons learned, or real-world examples makes content relatable and memorable. A narrative approach helps illustrate the value of your products or services organically, rather than relying solely on hard sell tactics. Storytelling transforms casual attention into invested interest, which is the foundation for monetization. Collect and analyze data continuously. Track what content captures attention most effectively, which products convert, and how engagement patterns evolve over time. Audience behavior reveals preferences, unmet needs, and optimal timing. Data-driven insights allow refinement of strategy, ensuring that the systems you build for converting attention are both efficient and effective. Iterative improvement based on evidence maximizes returns and reduces wasted effort. Monetization also depends on timing. Introduce offers when the audience is primed after a valuable lesson, a story that resonates, or a challenge they have completed. Timing creates alignment between perceived value and willingness to act. Overexposing offers too early diminishes trust, while delaying indefinitely risks losing momentum. Understanding the natural flow of engagement ensures offers are presented when conversion likelihood is highest. Community amplifies both attention and income. Encourage interaction not only between you and the audience, but among audience members themselves. Forums, social media groups, or comment sections that foster dialogue create a network effect. Community members often become advocates, spreading your message, generating leads, and creating additional income opportunities indirectly. The more vibrant and engaged the community, the more durable the attention stream becomes. Monetization through attention must be sustainable. Avoid tactics that exploit curiosity or manipulate emotions superficially. Short-term gains through clickbait, misleading promises, or aggressive tactics erode trust and reduce long-term value. True leverage comes from consistently delivering genuine value, which sustains attention over months and years, enabling continuous revenue without burning the audience's goodwill. Strategic partnerships enhance both reach and revenue. Collaborating with complementary creators, influencers, or brands exposes your work to new audiences and creates additional income channels. Partnerships should be mutually beneficial, ensuring alignment in values and audience fit. A well-chosen partnership multiplies attention and introduces revenue opportunities that would be difficult to access independently. Reinvesting revenue from attention-based monetization accelerates growth. Allocate profits to better content production, audience acquisition, automation tools, or product development. Each reinvestment increases reach, engagement, and conversion potential. Over time, the compounding effect transforms a modest audience into multiple streams of reliable income, scaling both influence and financial stability. Attention is also an asset to be protected. Platforms can change rules, algorithms can shift, and audiences can migrate. Diversifying channels, maintaining direct communication, such as email lists, and owning critical infrastructure reduces dependency and secures long-term income streams. Control over your audience's access ensures that your attention to income systems remain robust, regardless of external changes. Focus on incremental improvement. Even small increases in conversion rates, engagement depth, or content quality can have dramatic long-term effects. Systematic experimentation, testing headlines, formats, delivery times, and product offers, refines the process and enhances income potential. Continuous refinement ensures that the relationship between attention and revenue strengthens over time, rather than stagnating. The psychological impact of transforming attention into income is profound. It reframes how you view engagement, time, and influence. Each interaction becomes a measurable opportunity to provide value while creating personal and financial growth. The discipline to structure these systems, optimize messaging, and maintain integrity ensures that attention is consistently converted into meaningful results. Action begins by identifying the audience, understanding their needs, creating valuable content, and structuring systems that allow consistent engagement. Start small, test offerings, refine communication, and gradually scale both content and monetization channels. Every step reinforces the principle that attention, when respected and harnessed correctly, becomes a renewable source of income. The ultimate power of converting attention into income is freedom. Instead of trading hours for dollars, your influence and systems produce ongoing returns. With disciplines, strategy, and consistency, audience attention becomes a self-sustaining asset, growing in reach, trust, and profitability over time. Mastering this conversion transforms engagement into enduring wealth, creating a cycle where value delivered consistently leads to financial and personal freedom. Number 6. Build digital libraries, monetizing forever. Digital libraries are among the most resilient forms of assets in the modern economy. They transform knowledge, creative work, and curated resources into products that generate value continuously. Unlike physical goods, digital content can be replicated endlessly without degrading quality, and it can be distributed worldwide with minimal cost. Building a digital library is about creating a system where your intellectual output continues to serve, educate, or entertain people, while producing recurring income indefinitely. Start by identifying content with lasting relevance. Evergreen knowledge is key. Topics that remain useful, interesting, or applicable over time form the backbone of a sustainable library. This can include educational material, templates, frameworks, audio recordings, video tutorials, research collections, or curated resource lists. The value of your library increases with the uniqueness, quality, and applicability of each piece of content. A well-curated digital library acts as a one-stop destination for users seeking reliable and actionable material. Organize the library strategically. A random collection of content may hold value, but is difficult for users to navigate and for you to monetize. Structure the material logically, grouping by themes, skill levels, use cases, or format. Clear organization enhances usability, encourages repeated engagement, and allows you to bundle resources effectively. Users should feel that they are moving through a guided experience, with each element adding to their understanding or capability. Start with small, high-value pieces. You do not need to produce an entire encyclopedia at once. Focus on creating compact, actionable items that solve specific problems or fulfill distinct needs. Each contribution strengthens the overall library and can serve as an entry point for users. Early wins validate demand, attract attention, and provide revenue that can fund further expansion. Iterative growth ensures that the library develops sustainably and remains aligned with audience needs. Monetization strategies for digital libraries are diverse. Subscriptions offer recurring revenue by providing access to an ever-growing collection. Single purchase bundles allow users to pay for curated sets of content tailored to specific outcomes. Licensing your material to educational institutions, companies, or other content creators opens additional income streams. Each strategy depends on understanding the audience and aligning the pricing model with perceived value. Flexibility and monetization increases both revenue and audience satisfaction. Automation amplifies the library's potential. Set up systems for delivery, updates, and access management. Subscription platforms, automated email notifications, digital rights management, and payment processing allow the library to operate without requiring daily oversight. Once systems are in place, the library functions independently, continuously generating income while freeing you to focus on expansion, marketing, or content creation. Curation is critical. A digital library is not valuable simply because it exists. Its worth comes from thoughtful selection, organization, and presentation. Each item should contribute meaningfully to the whole, avoiding filler content or unnecessary repetition. The library's reputation grows as a reliable source, encouraging long-term engagement and increasing the likelihood of word-of-mouth promotion. Quality curation ensures the library remains relevant and respected. Regular updates maintain value. Even evergreen material benefits from occasional revisions, enhancements, or additions. Incorporating new insights, updated research, or improved formats keeps the library fresh and engaged. This ongoing refinement also signals to subscribers or buyers that the library is maintained actively, increasing trust and retention. A living digital library grows in worth over time rather than stagnating. Engagement and community further strengthen monetization. Encourage interaction through discussion forums, comment sections, or exclusive member groups. Active participation fosters a sense of belonging and encourages users to explore more of the library. Engagement also provides feedback for content improvement, reveals emerging needs, and creates opportunities for upselling or cross-selling additional resources. A connected audience is more likely to invest repeatedly. Protect your intellectual property. Digital content is inherently easy to copy, so securing rights is essential. Use watermarks, access restrictions, licensing agreements, and platform protections to ensure that your work generates revenue rather than being freely distributed without compensation. Ownership allows you to maintain control over the library and its income potential, preventing erosion of value over time. Leverage multiple formats. Transforming a single piece of knowledge into several content types multiplies reach and utility. For example, a research report can become a video summary, a slide deck, a podcast episode, and a practical checklist. Repurposing content ensures that your library addresses different learning styles, increasing usability and broadening the audience. Each format also opens additional monetization channels, expanding revenue potential without starting from scratch. Marketing the digital library requires consistent visibility. Build an audience through content marketing, social media, newsletters, webinars, or partnerships. Demonstrate the library's value by providing free samples, previews, or introductory modules. Showcasing quality builds trust and primes users to invest. Audience development and engagement are inseparable from monetization. Even the best library will remain dormant without visibility and promotion. Reinvest earnings strategically. Early income from subscriptions, purchases, or licenses can fund content expansion, platform improvements, advertising, or collaborations with other experts. Each reinvestment strengthens the library, increases perceived value, and amplifies long-term income. Compounding occurs when resources generated by the library are used to enhance its reach, quality, or appeal, creating a self-reinforcing growth loop. Track usage and performance metrics diligently, understanding which content is most accessed, which formats are preferred, and where engagement drops, allows targeted improvements. Analytics inform decisions about additions, removals, pricing adjustments, and marketing strategies. By monitoring user behavior, the library evolves in alignment with actual demand, maximizing relevance and revenue generation. Scalability is a cornerstone. Digital libraries can accommodate unlimited users without substantial increases in cost or effort. Unlike physical products, every additional subscriber or download has minimal marginal cost. This scalability enables exponential growth potential as content and systems are refined and audience reach expands. Designing the library with scalability in mind ensures it can handle growth without bottleneck. Automation of updates, notifications, and access also contributes to longevity. Scheduled releases, automated alerts about new content, and periodic engagement emails maintain user interest without demanding daily intervention. Each automated touchpoint reinforces the value of the library and encourages ongoing interaction, extending both income duration and user satisfaction. Strategic partnerships enhance reach and revenue. Collaborate with influencers, industry experts, or complementary platforms to cross-promote the library. These alliances expose your content to audiences who may not otherwise discover it, expanding both revenue and credibility. Partnerships should complement the library's focus and enhance perceived value to maintain coherence and trust. The emotional impact of a successfully monetized digital library is significant. It creates a sense of permanence and security as your intellectual output continues to generate value while freeing your time. Each addition, refinement, or new format strengthens the library's legacy, creating an asset that accumulates both influence and income. The library becomes a self-sustaining system that reflects your expertise and dedication. Immediate action begins by auditing existing knowledge, identifying high-value topics, and determining appropriate formats. Start small with a focused collection, establish clear structure and accessibility, implement automated delivery, and set up metrics to measure engagement. Expansion, diversification, and continuous improvement can follow, but the foundation is built on clarity, organization, and value. Long-term success relies on disciplined creation, curation, and strategic management. A digital library is not just content, it is a system, a resource, and a vehicle for lasting income. By consistently producing valuable material, automating delivery, engaging the audience, and protecting intellectual property, the library becomes a durable asset. Over time, it grows in reach, reputation, and revenue, providing both financial stability and personal satisfaction. The process of building a digital library transforms effort into enduring results. Every piece of content adds to a network of knowledge that continues to serve, educate, and generate income indefinitely. With careful planning, strategic automation, and relentless focus on value, your digital library becomes an asset that multiplies over time, creating wealth and influence that persist far beyond the initial work invested. Number 7. Optimize recurring revenue through automation. Recurring revenue is the foundation of financial stability and long-term growth. Unlike one-time sales, recurring income provides predictability, allowing strategic planning and compounding opportunities. The power of recurring revenue multiplies when combined with automation, creating systems that generate continuous cash flow with minimal ongoing effort. Optimizing this type of income requires both strategic thinking and disciplined implementation, turning small, repeatable actions into sustainable financial engines. Start by understanding your revenue streams. Identify which income sources repeat consistently and which are sporadic. Subscription services, membership programs, retainer contracts, digital products with ongoing access, and automated service agreements are examples of recurring income. Each stream should be analyzed for consistency, scalability, and potential for automation. Knowing exactly how your revenue flows allows you to pinpoint opportunities for improvement and implement systems that enhance efficiency. Automation begins with customer lifecycle management. From the first point of engagement to long-term retention, every touchpoint can be systematized. Automated onboarding sequences ensure that new customers receive immediate value, reducing churn and improving satisfaction. Payment processing, billing reminders, and access management can be handled by software platforms, ensuring consistency and freeing you from manual intervention. Each automated step strengthens the recurring revenue system while reducing human error. Segmentation enhances optimization. Not all customers have the same needs or behaviors. By categorizing users based on engagement levels, purchasing patterns, or preferences, you can tailor automated communications to maximize retention and encourage upselling. Personalized messaging resonates more effectively, fostering loyalty and increasing lifetime value. Automation allows this personalization to occur at scale, maintaining a human touch while handling thousands of interactions efficiently. Tracking metrics is essential for refinement. Key performance indicators such as churn rate, customer acquisition cost, lifetime value, and renewal rates reveal the health of recurring revenue streams. Automation tools can provide real-time insights, flagging anomalies or trends that require attention. Data-driven decisions enhance profitability by showing exactly where interventions, adjustments, or improvements are most needed. Monitoring performance consistently ensures the system operates at peak efficiency. Retention strategies drive recurring revenue optimization. Automated reminders, progress tracking, reward programs, and exclusive content access encourage customers to maintain engagement. Retention is more cost-effective than acquisition. Keeping an existing subscriber active generates revenue without the expense of constantly attracting new users. By leveraging automation for retention efforts, you create a consistent feedback loop where engagement naturally supports continued payments. Upselling and cross-selling multiply the impact of recurring revenue. Automation enables timely, relevant offers based on behavior or usage patterns. For instance, a subscriber who completes a certain module in a course could receive a targeted offer for advanced content. Similarly, a user who engages with one service may be prompted automatically to try complementary offerings. Intelligent automation increases revenue per customer without manual effort, maximizing the value of each relationship. Automation also improves operational efficiency. Manual management of recurring revenue, tracking payments, handling renewals, managing access, can be time-consuming and error-prone. Software platforms can automate invoicing, handle failed payments, generate reports, and even trigger corrective actions without intervention. By reducing the labor required to maintain recurring income, your time is freed to focus on growth, product development, or strategic expansion. Customer experience is central to long-term optimization. Automation should enhance, not diminish, the perception of value. Clear communication, intuitive interfaces, and timely interactions foster satisfaction. Automated messages, when designed thoughtfully, reassure customers, provide guidance, and maintain engagement. A seamless, well-managed experience reduces churn and reinforces trust, turning recurring revenue streams into resilient, high-value assets. Testing and iteration are essential. Automation systems must be continuously refined to improve effectiveness. Split testing emails, offers, content delivery timing, or upsell strategies provides insights into what maximizes engagement and revenue. Small adjustments can yield disproportionate results, especially when applied across large subscriber bases. Consistent refinement ensures that recurring revenue streams grow stronger and more efficient over time. Integration of tools amplifies results. Connecting CRM systems, email marketing platforms, analytics dashboards, and payment processors creates a cohesive ecosystem. Information flows seamlessly between components, allowing the automation to respond intelligently to customer behavior. For example, a failed payment can trigger an automated email sequence, prompt an account lock, or offer assistance, all without human intervention. Integrated systems enhance both operational efficiency and revenue reliability. Content delivery automation is particularly valuable for subscription-based products. Drip feeding material, scheduling releases, and sending reminders at key milestones keeps customers engaged and perceiving value continuously. When content delivery is predictable, timely, and structured, Subscribers are less likely to churn. Automation ensures consistency, reduces workload, and maintains a high-quality experience that supports ongoing payments. Scalability is a direct benefit of automation. As the subscriber base grows, manual systems quickly become bottlenecks. Automated processes allow the business to expand without proportional increases in labor or overhead. Each new subscriber can be onboarded, supported, and nurtured through automated sequences, making growth sustainable and predictable. Systems that scale efficiently are critical to turning recurring revenue into a substantial long-term asset. Revenue forecasting improves with automation. When processes are predictable and data flows consistently, projecting future income becomes more accurate. Automated reporting tools provide insights into expected renewals, churn, and expansion opportunities. Accurate forecasting informs strategic decisions, from marketing investments to product development, ensuring that recurring revenue contributes reliably to overall financial planning. Automation reduces risk. Human errors, missed renewals, or delayed communications can erode recurring income. Systems programmed to handle exceptions, alert to anomalies, and enforce consistency protect against revenue leakage. Predictable processes safeguard both income and reputation, ensuring the business continues to deliver value while generating consistent returns. Psychology plays a role in optimization. Automated communications should be designed to reinforce perceived value, cultivate loyalty, and remind customers why the relationship matters. Well-crafted reminders, milestone celebrations, or personalized insights strengthen engagement and reinforce the decision to continue paying. Automation allows these psychological triggers to operate continuously and consistently, increasing revenue without manual effort. Reinvestment of recurring revenue strengthens systems further. Profits can be allocated to improving automation platforms, adding new content or features, enhancing marketing reach, or developing complementary offerings. Each reinvestment compounds value, improving both the customer experience and the financial outcome. Optimizing recurring revenue is a dynamic process where every improvement builds on the last, creating a self-reinforcing growth cycle. Security and reliability are essential. Customers must trust that payments are handled securely, accounts function properly, and access is uninterrupted. Automated systems should include redundancies, secure protocols, and monitoring to maintain confidence. Reliability reduces churn and protects income streams, making automation not just efficient but resilient. Immediate action begins by identifying the highest value recurring revenue streams, selecting automation tools tailored to those processes, and implementing step-by-step sequences for onboarding, retention, and upselling. Monitor results, refine strategies, and expand gradually to encompass additional revenue opportunities. Each automated improvement compounds over time, increasing both income and operational freedom. Optimizing recurring revenue through automation transforms a business from a fragile, labor-dependent system into a durable, self-sustaining engine. Revenue flows predictably, scaling without proportional increases in effort, while systems continually refine themselves through data and iteration. Over time, recurring income supported by disciplined automation becomes a foundation for wealth creation, resilience, and freedom, allowing focus on innovation, growth, and strategic expansion rather than constant firefighting. Number 8. Purchase undervalued assets. Increasing yield. Wealth is often created not by following the crowd, but by recognizing value where others see risk or overlook opportunity. Purchasing undervalued assets is a strategy that leverages insight, patience, and disciplined analysis to generate high returns. Undervalued assets exist in every market: real estate, stocks, businesses, intellectual property, or digital products. The key is identifying these opportunities and acting decisively, transforming potential into sustained income and compounding wealth over time. The first step is developing the ability to recognize true value. This requires understanding both intrinsic worth and market perception. An asset may be priced low due to temporary challenges, lack of awareness, or general market pessimism. Distinguishing between temporary undervaluation and permanent decline is critical. Focus on fundamentals, revenue potential, growth prospects, underlying quality, and strategic positioning. Value emerges when you can see past superficial appearances to the asset's enduring capabilities. Research and analysis form the foundation of every acquisition. Examine financials, operational efficiency, historical performance, and industry trends. Compare the asset to its peers or market averages. Determine how much margin exists between current price and realistic potential. Strong research reduces risk, provides negotiation leverage, and ensures that your investment has a high probability of generating superior returns. Patience, during this stage, is as important as insight. Rushing often leads to overpaying or misjudging the opportunity. Negotiation is a tool for increasing yield. Acquiring an undervalued asset is rarely simply about finding it. It also requires securing it on terms that maximize advantage. Seek sellers motivated by liquidity, strategic shifts, or other pressures. Structure agreements to minimize upfront cost while preserving upside potential. Creative financing, deferred payments, or profit-sharing arrangements can enhance returns while reducing risk. Negotiation skill allows you to convert latent value into tangible financial gain. Operational improvement amplifies returns. Many undervalued assets underperform not because of their intrinsic limitations, but because management, systems, or strategy are suboptimal. Once acquired, focus on increasing efficiency, reducing waste, and optimizing revenue streams. A property may generate more income with strategic renovations. A business may improve margins by streamlining processes. The combination of acquisition and enhancement creates a multiplier effect on yield. Timing is critical. Markets fluctuate, and assets undervalued today may rise in the future or decline further if ignored. Develop a disciplined approach to timing acquisitions. Monitor trends, economic indicators, and sector-specific signals. Enter when risk is manageable, potential upside is substantial, and competition is minimal. Acting with patience and precision ensures that value is captured efficiently, rather than lost to impulsive decisions or external forces. Diversification mitigates risk while enhancing yield. Rather than concentrating all capital in a single asset, distribute investments across multiple undervalued opportunities in different sectors or formats. Diversification allows compounding across multiple fronts and reduces vulnerability to market volatility. By balancing risk and opportunity, you can steadily grow income streams while maintaining flexibility for future acquisition. Yield optimization requires continuous monitoring. Even after acquisition, assets are dynamic. Market conditions, competitor actions, and internal performance evolve. Regularly assess the effectiveness of strategies, track key metrics, and implement incremental improvements. Automation, operational efficiencies, and strategic enhancements can continually increase returns. High-yield assets are rarely static. Active management ensures growth and stability. Leverage magnifies returns but requires caution. Strategic use of borrowed capital or partnership structures can allow acquisition of larger or more profitable assets than personal capital alone would permit. The key is to align leverage with predictable income streams, ensuring debt obligations are covered and risks managed. Intelligent leverage transforms modest capital into disproportionately high returns while maintaining sustainability. Risk assessment is an ongoing requirement. While undervalued assets offer opportunity, not every low-priced asset is profitable. Evaluate downside scenarios, potential operational challenges, regulatory constraints, and market vulnerabilities. Establish contingency plans for mitigating losses or recovering value if conditions shift unexpectedly. Conservative planning increases confidence and resilience, allowing bold yet measured investment decisions. Maximizing yield often involves creative value extraction. Beyond basic operations, consider underutilized potential. Intellectual property can be licensed, real estate can be subdivided or repurposed. Businesses can expand into complementary markets. Identifying and implementing these opportunities transforms latent capacity into measurable returns. Each innovation increases the overall yield of the asset without relying solely on external market appreciation. Reinvestment accelerates wealth accumulation. Income generated from undervalued assets can fund further acquisitions, compounding growth. By cycling returns into additional high-value opportunities, each asset multiplies its effect on long-term income. This cycle of acquisition, optimization, and reinvestment creates a self-sustaining engine that grows steadily and exponentially over time. Automation enhances management efficiency. Digital tools, financial dashboards, and operational software reduce the labor required to monitor and maintain assets. For real estate, automated rent collection, maintenance scheduling, and tenant communications streamline cash flow. For businesses, integrated systems track performance, alert to anomalies, and manage recurring processes. Automation allows focus on strategic improvement rather than manual oversight, increasing both yield and freedom. The psychological discipline of undervalued asset acquisition is crucial. Emotional decision-making, fear, impatience, or greed can lead to overpaying, misjudging potential, or abandoning opportunities. Approach each investment analytically, with long-term perspective and confidence in your research. Recognize that initial appearances may be misleading. Value often reveals itself only with careful observation, strategic action, and disciplined patience. Market cycles create opportunities. Economic downturns, sector-specific shifts, or temporary disruptions can create windows where quality assets are priced below intrinsic value. By understanding cycles and maintaining readiness, you can acquire high-potential assets at advantageous prices. Timing combined with preparedness turns market fluctuations into opportunities for significant yield increases. Strategic alliances and partnerships expand capacity. Collaborating with investors, operators, or advisors can provide access to larger or more complex opportunities, sharing expertise and mitigating risk. Alliances allow you to capture value that might be unattainable alone, enhancing yield and accelerating growth. Collective insight, resources, and negotiation power amplify returns while spreading responsibilities. Exit strategies reinforce yield planning. Each acquisition should be evaluated not only for current performance, but for potential exit value. Whether through resale, merger, or partial liquidation, having a clear plan allows flexibility and maximizes returns over the asset's life cycle. A well-defined exit strategy aligns decisions, reduces risk, and ensures that the income generated can be converted into new opportunities when needed. Immediate action begins with developing analytical skill, researching potential assets, identifying undervalued opportunities, and building a disciplined approach to acquisition. Start with a manageable investment, optimize operations post-purchase, and track performance diligently. Each successful acquisition builds both experience and financial momentum, creating confidence and capacity for larger, higher-yield opportunities. The strategy of purchasing undervalued assets transforms insight into wealth. By combining patience, research, negotiation, operational improvement, and disciplined reinvestment, every acquisition becomes a lever for compounding income. Undervalued assets, when recognized and optimized, produce returns far exceeding initial investment, creating a cycle of growth, yield, and sustainable financial freedom. Number 9. Transform expertise into licensing royalties. Expertise is one of the most undervalued forms of capital. Knowledge, skill, and unique insight represent assets that can generate income long after the initial effort of acquiring them. Transforming expertise into licensing royalties allows individuals to leverage intellectual property, frameworks, methods, or creative works to earn continuously. This approach converts personal proficiency into scalable, self-sustaining income, freeing time while maximizing value from years of accumulated experience. The first step is identifying marketable expertise. Not all knowledge carries equal licensing potential, so focus on skills or insights that solve tangible problems, streamline processes, or provide a distinct advantage. It may be technical proficiency, creative methodology, operational systems, or specialized content. The key is that your expertise is transferable, codifiable, and valuable to others who are willing to pay for access. Clarity about what constitutes your unique value sets the foundation for monetization. Documenting your expertise is critical. Unstructured knowledge cannot easily be licensed. Create detailed guides, templates, manuals, or systems that clearly articulate your methods. Break processes into replicable steps. Provide examples and highlight best practices. The documentation should be comprehensive enough that others can implement your strategies independently, yet structured to protect proprietary nuances. This step transforms abstract knowledge into tangible intellectual property, ready for license. Next, identify potential licensees. Licensing works by granting others the right to use your expertise in exchange for royalties or fees. Potential licensees might include companies, educational institutions, professionals, or entrepreneurs who benefit from applying your methods without developing them independently. Understanding the needs, capabilities, and budgets of your target licensees ensures that your offer aligns with market demand and creates mutual value. Structuring licensing agreements strategically is essential. Agreements should clearly define scope, duration, payment terms, usage limitations, and intellectual property rights. Royalty rates can be fixed percentages of revenue, per-use fees, or tiered models based on scale of application. Clear agreements protect your interests, while providing flexibility for growth and expansion. Legal safeguards ensure that your intellectual property is respected, enforceable, and capable of generating continuous income. Automation enhances licensing scalability. Digital distribution, subscription access, and automated reporting can reduce administrative burden. Licensees can receive content, updates, and support through structured systems, minimizing the need for direct intervention. Automation allows royalties to flow consistently while freeing time for creating additional intellectual property, marketing to new licensees, or developing complementary products. Each automated touchpoint compounds the revenue potential. Education and training amplify value. Providing instructional materials, workshops, or online tutorials as part of the licensing agreement increases adoption and proper implementation. When licensees succeed with your methods, they perceive higher value and are more likely to maintain agreements, renew contracts, or expand their use of your intellectual property. Effective training converts knowledge into actionable results, reinforcing your reputation and sustaining long-term royalties. Marketing your expertise strategically is essential. Position yourself as an authority through content, case studies, testimonials, and public speaking. Demonstrating the effectiveness of your methods creates trust and desirability, which increases willingness to license. The perception of authority is as important as the expertise itself. A well-regarded expert commands higher royalties and attracts a larger audience of potential licensees. Diversification strengthens income stability. Your expertise can be packaged in multiple formats: digital manuals, software tools, online courses, workshops, or consulting frameworks. Each format creates a separate licensing stream, reducing reliance on a single revenue source. Multiple streams compound income while catering to different markets and preferences. Diversification also allows you to reach licensees with varying budgets and operational needs. Protecting intellectual property is critical. Patents, trademarks, copyrights, or trade secrets safeguard your methods and content. Licensing agreements should include clear language regarding usage limits, redistribution, and modifications. Enforcement mechanisms ensure that unauthorized use does not erode revenue. Protecting intellectual property preserves the scarcity and value of your expertise, maintaining its ability to generate consistent royalties over time. Monitoring and refinement enhance long-term income. Track usage patterns, feedback from licensees, and revenue performance. Adjust terms, provide updates, or improve training materials based on insights. Licensing is a dynamic process. Staying attuned to market needs ensures that your intellectual property remains relevant, effective, and profitable. Iterative improvement protects both reputation and income stream. Collaboration can expand reach. Partner with organizations, influencers, or complementary experts to license your expertise more broadly. Joint ventures allow cross-promotion and introduce your intellectual property to audiences that might otherwise be inaccessible. Collaborative licensing increases scale while maintaining control and ownership, multiplying the potential impact in income without proportional effort. Strategic reinvestment compounds returns. Income generated from licensing can fund further development of new expertise, production of complementary materials, or marketing to additional licensees. Reinvestment transforms initial royalties into a growing portfolio of intellectual property, each stream reinforcing the other. Over time, this cycle produces self-sustaining wealth, rooted in knowledge rather than continuous labor. Automation also supports compliance and reporting. Systems can track usage, calculate royalties, issue invoices, and notify licensees of updates automatically. These tools reduce administrative complexity, minimize errors, and ensure timely revenue capture. Efficient systems enhance the reliability of income and create a scalable framework for managing multiple licensees simultaneously. Pricing strategies influence both adoption and yield. Establishing value-based pricing reflects the outcomes your expertise delivers, not merely the cost of content production. Premium pricing signals quality and scarcity, attracting serious licensees willing to invest in implementation. Flexible structures, such as tiered or performance-based royalties, can maximize revenue while accommodating diverse market segments. Pricing must align with perceived impact to optimize both adoption and income. Legal oversight ensures sustainability. Licensing agreements must comply with regional and international laws, intellectual property standards, and contractual regulations. Professional guidance mitigates risk, clarifies obligations, and reinforces enforceability. Legal diligence protects revenue streams, prevents disputes, and maintains long-term stability in licensing arrangements. The emotional advantage of transforming expertise into royalties is profound. Instead of trading hours for money, your knowledge continues to generate value independently. Time, effort, and intellectual investment compound over years, producing consistent financial returns. This approach converts skill into a perpetually earning asset, freeing mental and physical energy for innovation, personal growth, or new projects. Immediate action begins with auditing personal knowledge, codifying methods into teachable or transferable formats, identifying target licensees, and designing agreements that clearly define usage and compensation. Start with a small pilot to test demand, refine materials, and establish processes. Early success provides both proof of concept and a foundation for scaling licensing operations. Over time, a disciplined approach to licensing transforms expertise into a portfolio of royalty-generating assets. Each license represents not only immediate income, but a long-term claim on value created by your knowledge. Combined with automation, legal safeguards, and strategic marketing, licensing converts intellectual capital into enduring wealth. The process empowers experts to leverage years of experience into a system that produces sustainable, compounding income, turning personal skill into perpetual financial freedom. Number 10. Create compounding streams via reinvestment. True wealth is built not merely by earning, but by strategically reinvesting what is earned to create multiple streams that grow exponentially over time. Reinvestment is the engine that converts income into larger income, turning one source of revenue into many interconnected streams. Compounding is not limited to financial assets. It applies equally to skills, knowledge, systems, and influence. The principle is simple yet profound. Reinvesting consistently and intelligently accelerates growth far beyond linear progression, creating a self-reinforcing cycle of prosperity. Start with clarity about the sources of your current income. Whether it comes from businesses, investments, digital assets, or intellectual property, understanding the performance and reliability of each stream is essential. Identify which assets generate steady returns and which have the potential for expansion through reinvestment. This awareness allows you to allocate resources strategically, ensuring that capital is directed where it will yield the highest compounded growth. The next step is adopting a long-term mindset. Compounding works most effectively when given time to operate, Short-term thinking or impulsive consumption reduces the potential for exponential growth. Every dollar or unit of effort reinvested is a seed for future returns. Patience, discipline, and consistency are required to allow these seeds to mature and multiply. Wealth creation is rarely instantaneous. It is the result of persistent strategic reinvestment over months, years. Reinvestment begins with prioritizing high-yield opportunities. Not all opportunities are equal. Some provide greater returns per unit of capital or effort. Evaluate investments, business expansions, or intellectual property enhancements based on projected growth, scalability, and alignment with long-term objectives. Focus on those that multiply returns rather than merely maintain the status quo. Choosing high-impact opportunities amplifies the effect of compounding, accelerating the growth of your streams. Diversification strengthens compounding systems. By reinvesting across multiple channels, stocks, businesses, real estate, digital assets, or skill development, you reduce risk and increase the likelihood of continuous growth. Each stream operates independently, so setbacks in one area do not halt overall progress. Diversification allows you to harness the compounding effect across a portfolio of assets, each contributing to the acceleration of wealth creation. Automation magnifies compounding effects. Reinvesting manually is effective, but limited by time and attention. Automated reinvestment strategies, such as recurring investment plans, systematized business scaling, or automated royalty reinvestment, ensure consistency and efficiency. Automation transforms deliberate strategies into continuous processes, allowing growth to proceed without constant manual intervention. The more systems you automate, the more reliably your streams multiply over time. Compounding extends beyond money into expertise and systems. Reinvesting knowledge into training, digital products, or licensing expands both income and influence. Reinforcing your skill set, codifying methods, or creating scalable content generates secondary revenue streams without proportional increases in labor. Each reinvested insight becomes an asset, producing returns that further fund additional reinvestment. This multidimensional approach strengthens both financial and intellectual capital simultaneously. Strategic reinvestment in operational improvement enhances efficiency. Optimizing processes, technology, or workflows increases output without proportional effort, effectively raising the yield of existing assets. A business, for example, can generate more revenue by improving automation, supply chains, or customer retention. Each improvement compounds over time, magnifying the impact of the original investment and accelerating overall growth. Regular evaluation is essential to optimize compounding. Review performance metrics for each income stream, measure returns on reinvestment, and identify areas for further enhancement. Some assets may plateau or underperform, requiring strategic reallocation. Continuous assessment ensures that reinvestment remains productive and maximizes growth potential. Without periodic evaluation, compounding becomes inconsistent and opportunities are wasted. Reinvested income can also fund new opportunities, creating a snowball effect. Initial streams, whether small or moderate, can be leveraged to acquire additional assets or expand into adjacent markets. Over time, these secondary and tertiary streams interact, creating interconnected systems of growth. The more streams are created and reinvested strategically, the greater the exponential effect. Each reinvestment compounds not only individual returns, but the entire network of assets, accelerating wealth accumulation. Leverage amplifies reinvestment potential when used prudently. Borrowing capital or forming strategic partnerships to reinvest can magnify growth, provided risks are assessed and returns exceed costs. Leverage allows you to scale opportunities that might be otherwise unattainable with personal resources alone. Careful application of leverage transforms modest investments into significantly larger compounding streams, enhancing both speed and magnitude of wealth creation. Tax efficiency enhances compounding. Structuring investments, acquisitions, or intellectual property holdings in a manner that minimizes unnecessary taxation allows a greater portion of reinvested income to remain productive. Understanding applicable laws, incentives, or structures maximizes the capital available for reinvestment, ensuring that compounding operates on the largest possible base. Even small improvements in efficiency compound significantly over time. Education and skill reinvestment are equally powerful. Continuously improving knowledge, professional expertise, or strategic insight multiplies the value of every reinvestment. Enhanced expertise leads to better decision-making, higher returns, and the creation of additional streams. Time and effort invested in personal growth compound by increasing the effectiveness of capital deployment and strategic planning. Community and network reinvestment amplify results. Investing in relationships, mentorship, partnerships, or collaborations creates opportunities that extend the reach of your resources. Networks provide access to deals, insights, or complementary skills that may otherwise be unavailable. Reinvesting social capital generates indirect financial benefits that compound alongside direct monetary streams, creating multidimensional growth. Psychological discipline underpins successful compounding. Emotional impulses to consume, panic, or abandon strategies interrupt the accumulation of wealth. Reinforcement of patience, resilience, and strategic focus ensures that reinvestment continues consistently, even during uncertainty. The mindset of seeing each reinvestment as a step toward future freedom transforms disciplined action into a habit, magnifying long-term impact. Visualization strengthens reinvestment strategies. Clearly imagining how each reinvested stream will interact, grow, and multiply allows for more precise decision-making. Consider long-term outcomes, potential synergies, and how incremental improvements will accumulate over time. Visualization helps prioritize investments that contribute most effectively to compounding growth, maintaining focus on high-leverage opportunities. Scaling streams requires systems thinking. Treat each asset, revenue source, or intellectual property piece as part of an interconnected ecosystem. Reinvestment should strengthen not just individual streams, but the synergy among them. Cross-promotion, complementary products, or integrated platforms amplify returns and create a network effect where growth in one area accelerates results elsewhere. Systems thinking multiplies the power of compounding beyond isolated gain. Immediate action begins with evaluating current income streams, identifying high-impact reinvestment opportunities, and allocating resources strategically. Implement automation where possible, establish metrics to track performance, and reinvest consistently. Start modestly if needed, but commit to ongoing allocation of profits into expansion, enhancement, or new opportunities. Discipline in execution compounds more reliably than occasional large efforts. Long-term compounding transforms modest beginnings into exponential wealth. Each reinvestment multiplies prior results, creating self-sustaining streams that grow in scope, scale, and resilience. By consistently allocating income to high-yield, strategically selected opportunities, compounding transforms effort, capital, and knowledge into enduring assets. Over years and decades, the combination of disciplined reinvestment, automation, and strategic expansion produces financial independence and enduring freedom, making every decision today an investment in an ever-growing future.